All right, good day, everybody. This is Michael Storm, also known as Robin Hood with ForexTradeRoom.net, and I'd like to go over a bunch of charts with you today. This is our end of the month and beginning of the new month overview, where we take a look at the monthly, weekly, and the large trends. We want to get a picture of the very big picture of what's happening in the total market. So I hope this will be helpful to you. We'll start off first of all with the euro. And if we look at the euro on the monthly chart, you can see the euro's had some pretty good runs, actually. We have quite a few of them here. You can see when the euro puts on a monthly decline, it can really last quite a period of time. When the euro puts on a monthly rise, that can also last very well. And we see these swings in the euro, monthly declines that just keep going, monthly rises, monthly A, B, C, D type of moves. Then you have another monthly trend here for the euro that for about a year and a half, from 2011 going into middle 2012, was nothing but down. We dropped from 150, dropped all the way down here towards the 120 area, and have bounced off of that. So we've got 7 months now where we have a beautiful, beautiful rise. Monthly chart, very clear to see, 7 green, glorious months. With it, what is that? Oh boy, something wrong. Nasty, ouch, terrible monthly sell bar. Okay, so it does look on the monthly chart like the trend line here has been broken. 7 months are being given up. We have a terrible monthly sell, and this is not a very good picture. It's rather ugly, to say the truth. A very ugly picture of the euro possibly breaking down and ready to revert into a downtrend. Now, if we look at our weekly chart, we can see here that we have actually broken a weekly trend line as well. So we have a monthly trend line break, and we have a weekly trend line breaking, okay? And multiple bars straight down on the weekly chart. It's a very negative picture, a very ugly picture, and this coincides with exactly what's happening on the US dollar index, which we're going to get to in just a moment. So if we look at the daily chart now, we drop over to our daily chart of the euro. We can see that we have slid below just about every fib level that we cared about. We even have breached a very technical level right here, which we kind of hoped actually would not have happened, right at about 130. That's a very big number, very important psychological level at 130. 1.300 and all the zeros that go after it. This is a bad thing to see break, and we have a very nice daily downtrend that's been developing for about a month now. The entire month of February, as you can see, we were at 137. We're now down in the 130s. Okay, that is 7 large figures. So technically, this is a hard thing to get too jacked up at the current moment on bearishness, because, and we will get into the dollar index in just a moment, but the overall trend is changing. We have a month to view that. We have multiple weeks down, and we can see the 130 level cracking. So what are we looking for on the euro in the weeks and the months ahead? Well, in the weeks and the months ahead, we are most likely looking at a downward, a general downward push, but nothing falls in a straight line. Okay, we know that it just doesn't drop and drop and never, get any kind of a bounce. So we are expecting a bounce off this level because we've just stopped the entire world out right here. So I would expect a bounce off of this. Possibly as high as 131, maybe even as high as 132. But if we ever do see, anywhere towards 132 again, I can see that that's very clearly a resistive area, and I would be primed to sell it, okay, because the monthly chart is telling me got a fresh new trend underway. So if we can get anywhere near this 132 level, or possibly a little bit higher, but it's actually a little hard to believe right now. If we make it there, we want to basically be sellers, and we're looking for the longer term trade now. It's bringing into play the 200 moving average, which is approximately 128.38 right now. Now that will rise a little bit as time goes on, so it might become 128.40 in a couple of days. Currently, the stochastics are very, very oversold. We can see what's happened before. If the stochastics stay down here for a length of time, a couple of weeks, sometimes we get very sharp, sharp rallies that drive us up. All right, and there's many examples of this. You can just look at the stochastics. You can look. They're really nothing more than a representation of price and time together, and we have that same look right now. So we are in danger of a potential move because we're hovering here in the lows for a couple of weeks now. So we are in danger of receiving, a rise that might last for a few weeks, bringing us up high. But for the most part, the trend is working its way down now. All right, so that's enough of the euro. Let's go on and take a look at the dollar index before we look at every other chart, because the currency markets all work together, and we have a really nice picture being drawn out right now. All right, first thing to bring your attention to is on the U.S. dollar index, we have been in a terrible decline for a long, long time. It's a very bearish market. But you can see on the weekly chart of the U.S. dollar index that support has held at approximately the 79 location. Now, we've tested this multiple times. There's a test there. There's a test over here. We can see another test there back in December. And we see another test here in January. So if I blow this up a little bigger for us, I want to make sure you guys can see this. So I will try and break the chart out really, really wide for you. This 79 location has, for the most part, held, even though at one point it was under very severe attack right here and broke down a tiny little bit. We can see that just happening in January. So now we have a weekly buy setup and another weekly bar. We've pushed through a trend line, all right, multiple weeks. I don't know how many this is. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. No, it's a little more than a dozen weeks. We've pushed through this trend line, and we're really popping. All right, so dollar index is making a big extension at the current point. Now, I couldn't find this on my harmonic indicator. I don't know why. I see it with my eyeballs, but I guess for whatever reason, it's just not showing up harmonically. But my thoughts are that we are receiving some kind of a bearish butterfly or a bearish Gartley formation. Might be building. Don't quote me on this because it's not showing up on my indicator. But this might be here. Maybe on core harmonics it'll show up. I don't know, as I haven't looked at that one. So we had a daily sell that occurred just the other day. You can see that it did not work. The daily sell bar only broke down by a small amount and immediately rocked the highs, and we're pumping up quite large now. So the trend is very, very fierce for the dollar. The U.S. dollar is really gaining some momentum here. Been a lot of news out of the Eurozone that's been pretty negative. Euro negative news continually hitting the market is really helping the euro to fall 700 pips. It's increasing the dollar big time. The news out of the United Kingdom has been really bearish. We've got more quantitative easing votes out there now, and we can see what's going on with the pound. It's literally falling apart. And then there was the news for New Zealand and the news also for Australia that they're really unhappy with the prices of their currencies being so high, and they're looking for them to go down, the market to naturally correct, they say, or they'll intervene and lower rates. So all of this is working out for a very dollar bullish scenario. Even when you see what's happening with gold, that hedge fund blowing up the other day, $560 million disappearing on gold and oil and cattle. And I feel bad for that hedge fund, but they really, they put their hedges out there the wrong way, and they got roasted. So anyway, looking at the U.S. dollar index now, I see a lot of support right here at 81.60. I see very good support there. I actually see moderate support at approximately 82. And I'm looking over here at this bearish picture and the 200 MA and the crossing. All the MAs, by the way, are in an uptrend right now. So we're obviously in an uptrend. But if we ever do return down here towards 81, I expect that to hold like a rock. Alrighty, let me just make some adjustments here. Okay, so if this does turn out to be a harmonic pattern and it shows up at some point, we make this completion down here. This would be the B target, by the way, right here at approximately 81. I would expect that to hold like a rock, and we would receive a bounce off of it. So just, looking well at the monthly buy signal and the monthly uptrend, looking well at the weekly uptrend and the trend line break, looking well at the daily and how the moving averages are crossing and really pointing north, and we've got a great daily climb. Looking at the 4-hour chart, that's obviously the classic uptrend. So we do have the US dollar gaining quite a bit. All right, so we've looked at euro, we've looked at dollar, and let's look at the pound. Now, the pound is in some serious tragedy right now. This is actually extreme. I don't know. Words cannot describe this one, okay? Very, very extreme. Let's suffice that to be enough. Back here, 2009, and well, we've got the very beginning of 2009, and then one more time you see a few months later into 2009, you have this incredible retest right there. So we're looking at that, and we're looking over here at 142.40s, middle 40s. This is a huge technical level, and so we're drawing our trend line in, which is about 4 years, 4-year trend line. All right, we can draw it from 2009, we can draw it from middle of 2010, and we can draw it here, the middle of 2012. Now this trend line is being broken with some very serious force, and it is putting in a monster selling action. So this level is awful. I mean, the picture here is really, really bad. In fact, pound dollar has attacked 150 and gone through it. Now this is a weekly chart, by the way, so the weekly picture is really very, very terrible. And I'm not saying that this is going to happen, but if it ever does, if this weekly pattern ever comes up here and retests this trend line, which truly would be amazing. I see nothing at all to possibly bring this. I don't see any catalyst about that could make this launch that far up. But if it ever did, that would be a great place to sell, looking for some serious moves that would, possibly bring us all the way down into the 2010 low, which is approximately 800 pips lower than where we are right now. Pound dollar, it's just not doing good. Okay, I hope that that's clear enough how bad it is. We've got very little bounce. You can see the dead cat bounces on the daily charts have not been good at all. The downtrend is significant. We have, a hammer formation tried to occur, popped a little bit, they slammed it again. Daily buy, it tried to pop, they slammed it again. So we retested that daily buy signal. Even there, it tried to pop again, but could not. Take notice of where we failed. Right at the recent high. 152.16s, 152.20, anything above 152 was sold aggressively and absolutely fell apart. So we don't have a daily buy in here. This is nothing but a mega bearish downtrend. Really, really tragic, as a matter of fact. So, looking at the weekly chart, looking at the daily chart, we can see a practical nightmare scenario with the US dollar increasing in huge strength and pound literally falling to pieces across the board. We don't have the time to look at all of them, like pound yen, pound Canada, pound Australia, etc. But these are all very bad in the dumps. Every pound cross is basically being slaughtered, to put it mildly. Slaughtered. Great word. Okay. So after the pound, we could come over and take a look at the euro pound and see what's going on between these two. The euro pound is, we've got right over here, there was a beautiful triangle that was forming on the monthly euro pound. We had a really nice triangle. And that triangle broke down and lasted for quite a while, about 1.5 years. We made a major fall all the way down into the 78 level, which was a previous low. If you look all the way back to 2008, that got attacked right here, and a significant liftoff of that area, a very significant move. The stochastics at the time, notice they were quite oversold several months ago, and we now have a beautiful new trend bringing us up for a long time now. So we may be peaking, but we are currently snapping this trend line right here that you see that has been drawn in for a long time. We're snapping the trend line. We have a monthly confluence at a 87.78 to 87.99. Notice that we peaked at that level. This is a monthly confluence of fibs where we have a 50% fib and a 786 fib, which was an incredible target for the bulls, by the way. Just amazing target. And we hit that level and have a big downdraft after that of about 200 points. Looking at the monthly chart, it's obviously an incredible uptrend. The weekly is as well. It does appear to be slightly Wyckoff upthrust event right here where we've gone over 87. There was the big upthrust, and it looks like we're getting a complete pullback again. So this is pretty critical at the moment. The weekly stochastics look like they're oversold and about to cross and possibly push it back again. But if the 86 level is to break right here, we see 86 break, I will expect a sharp retraction at that point, down into 85 or potentially lower. But there will be buyers lurking. I'm fairly sure with the price action that we see, there will be buyers lurking at all times. So daily chart, 86 is supportive, and if we break 86, we probably won't move more than 85 or just a little bit lower, which, potentially if we draw this out a little bit longer term, let me bring it out nice and wide so we can see it. We have this low right here, which is now very, very significant. 84.60s, 84.50s, very significant low, super important. And over the course of time, we're going to have the 55 DMA creeping up. So I'm not saying we're going here, but if we ever do, if we ever return all the way down, and if we have the power to smash that 40, we're probably only going to pull back into the 55. I'm just trying to think, weeks ahead right now. Weeks, days and days on end. I'm looking at this. If we ever break this, we're probably going to stall right there and lift off. Okay? So, Euro Pound, great uptrend right now. Currently, wonderful, wonderful uptrend. All right, and then there's several other pairs we should look at, actually. Swissy is a big one. We will look at the Swissy and the Canadian dollar as well, and Australia and New Zealand because of their importance. So I'm just going to try and look at the majors right now. All right. So as I was telling my trade room, actually many weeks ago, we had a large discussion about this, that the Canadian dollar was probably not going to stay like this. We had looked at the monthly chart, and we looked at the wide range bars, and I commented on this actually before this green bar happened. We were talking about how it was too narrow, it was too tight, and the bars were all red, and they were pulling back to support here for U.S. Canada, and that we totally anticipated that this would not stay this way and we would have a breakout. And we determined that most likely it was going up and that it was not going to go down. So if we look at this now, we have monthly support with a monthly buy. So the trend is changing. This bar is turning green. We have monthly support, monthly buy signal. Stochastics very oversold. What do I anticipate in time? Well, literally in the weeks and the months ahead, I anticipate these stochastics to be moving their little selves up like that as this monthly buy signal right here continues to break out. We go back into parity and higher. Okay, I'm really looking at the U.S. dollar continuing in its strength and Swiss weakening up big time. Now, oh, I'm sorry, brain fart. Pardon my language. We were talking about Canada in the room, not Swissy. My bad. But the charts look very similar, so I apologize about that. I just made a big mistake right there. I was thinking Canada, but I'm drawing Swissy. Forgive me. I made an error in my judgment. I've got two things on my mind I want to talk to you about, and one of them is Swiss, one of them is CAD. All right, so hold that thought because we will jump over to Canada in a few moments. But right now, the Swissy's got a monthly buy, and I truly anticipate this running up big time. I also anticipate the Canadian dollar weakening dramatically as the US dollar increases in strength. So, looking here at Swiss, we've got a monster trend line right here for the weekly chart, breaking the trend line and starting a whole new uptrend. We have 95, obviously, being a very difficult level to get past. It will be a little while, maybe a day or a week, I don't know, but eventually we should be able to punch past 95. And I am personally calling for parity level to be revisited in the weeks and the months ahead. Now, how long that takes, I know not. I mean, it could be 2 months, 6 months, I don't know. I'm not going to try and peg the time. Who can tell? You can't tell. I just know eventually we're going back to parity, or shall I say, I believe that we're going back to parity. I believe it very firmly. And looking at the daily chart, we can also see that we have a couple of trend lines. Just depends on how you're going to draw it, but you can see that no matter how you do draw the trend line, you're breaking it. Okay, so US Swiss is breaking trend lines and even attacked that 200 MA. And look at the power. I mean, we blew through the 886 fib. The 886 fib did not hold it. The 200 MA did not hold it. It went. It really went. This is a powerful, powerful signal. And so we're looking over many, many days ahead, the eventual return towards parity. And nothing moves in a straight line. So it is going to take a while. Believe me, I'm not suggesting that somebody purchase the high. We're up in the high. I don't want to buy the high. I like to buy retracements. Okay. So we're looking at a channel right now that is starting to look like this on the daily chart as an expanding megaphone or as a channel that will slowly, pull down, go up. Pull down, go up. This is the way the market works. I mean, it just goes crazy like that. Okay? Generally speaking, we're looking at a rise on Swiss. Now, I don't want to beat a dead horse, so let's move along. We have the 4-hour sell bar. Very, very oversold. Overbought at the moment. And I am looking for a pullback to support right now. We can see support down towards this level here, 93.60s, and then again towards 93.20s, and absolutely expect a blast off of that level should this ever occur. I'm expecting Swiss to go crazy. The other thing too, which I don't have too much time, I don't want to eat up too much video time here, but Euro Swiss as well is a good indication of this. We actually called this long many, many days ago. To my trade room roomies, we were discussing way back in here, way back in these highs, how we would most likely see a return to these ultra peak points, but that it could take a month to happen. And let's see, January, what is this? This is January, February. Okay, well, it took about 5 weeks to happen, and we did see a pullback into this incredible support. This is now becoming amazing support, and we called it long. A couple days ago, we said, get long, we're going up. And I drew in this 382 fib, and this was actually the first real target, and then our second target is over here. So I'm not saying to buy this now because it's not a buy at this moment. It was a buy 4 days ago, and right now we're reaching targets. But eventually, I'm looking for this to go way up here. 6 months to a year, we should be at about 130. All right. As the Swiss franc completely weakens. All right. So it's all, abatement of fear, basically. What should be our next chart? Oh yeah, Canada, the one I messed up on. Here we go. Now, CAD on the monthly chart, this is what I meant to say, but it was a similar picture with Swissy. We have monthly support holding. We had several bars. These are the 3 bars I was meaning to talk to you about. How tight they are, how narrow range. There was almost no movement at all for 3 whole months on the US CAD. We were absolutely anticipating a breakout, and it has happened, and it has happened with a lot of force. It's beautiful, just beautiful. I got a nice rise here, okay, a big wide range bar absolutely closing right at the top. Strong sign. I mean, this is a beautiful signal that we have a monthly buy, and it's very powerful. All right, so I really like US Canada long. Not at this exact moment, I'm looking short, but I do like it long in general. The weekly chart, you can see right here that we have broken a weekly trend line that is in place from pretty much August, September area of 2011. And then we've got the middle of 2012. And then we have right over here, just last month, January. And we see this incredible break of this weekly trend line. It's just breaking hard. Right now, we're getting a move up into the 786 fib. I'm sorry, the 886 fib. And I'm expecting this fib line right here at 103.50s to hold this for now. Only for a little while, man. And not forever, okay? For a little while, this is going to hold, and we need a pullback. On the daily chart, we can see very similar to what we saw on the dollar index as well, that we had a daily sell bar for the dollar index, US dollar index, and it ramped up like crazy and did not work. We see the very same thing on US Canada. Okay, now that is my target, but I don't know for sure that we're actually going to reach that target. I may have to adjust my price. Right now I am currently short on the US CAD, and hoping that we can make it towards this level, but I'm kind of losing faith a little bit. And I'll show you why. If we look at the daily, if we blow this out a little better, we can see the trend line right here. Let me put an arrow on it. We've got a trend line right there. That was resistance in November. And we have a trend line, you know, we can draw this all the way into January. And we've broken out so firmly that we may never make it back to the 618 fib level. It just might not happen. You know, our pull down might only run us as low as 102. We may stall at 102. If we break 102, I'm thinking, you know, hopefully to 101.50, but that may be the end. We may never make it to 101.15. And so I'll be watching this for signs to come in the days ahead. You know, we have a pretty good looking sell bar right now. I can't complain. I'm short and it's dropping, so I can't be upset about that. But when we get down in here, we have to watch for a sign of a reversal and eventually a liftoff that will push US Canada up into dizzying heights as a longer term trade. All right, because we're doing this overview now at the end of February. This is the very beginning of March. We want to make sure we look at the large picture. We don't want to just talk about, you know, 1 hour bars right now. We're not doing that. All right, stretching it out bigger so we can really see it. We have the actual thrust a second time, thrusting us up to the 144 fib extension. I don't know if you can see that all that clearly. I have some... Let me get rid of these lines. There we go. That's better. Okay, so we hit the 144 fib. I didn't know, but I was thinking we might have hit the 1618 extension, so that's where my double would have been located if we hit that level. But thankfully we didn't hit it. And we're pulling back sharply. We expect a downdraft and a liftoff. All right, enough of that. Okay, two more to go through. I'm sorry, I don't mean to be wasting your time. I'm trying to just be very clear in what I'm saying. 2 more to go through. We want to look at, well, let's see here. We'll do odd first. All right, now with Australia, we have a few things to consider. First of all, the odd Aussie dollar is really high. There's no doubt. they're talking about, they're starting to tell you we're thinking about intervening, we're thinking about doing something, we're not ready yet, but we could, we might cut, we might not cut. They're letting you know something's coming up, okay? And if we look at the Aussie on the monthly chart, you see the structure level over here at approximately 95. I know it's not perfect. I understand. We went higher than 95 there. We went, just try and bear with me, and we'll just get the general picture. You can see how important 95 is. You can see its importance here, here, there. Just goes on and on and on. You can see it over here, all the months. I mean, look at how magnetic 95 area is. Look at how 95 has held us for 3 months. Look at how it was tried to be hit over here back in the early portion of 2011. Look here at 2012, the very, we didn't even make it to 2012. I'm sorry, this is the latter period of 2011. And you should be able to see how clear it is. I mean, it's just strikingly, strikingly clear that 95 is a major number for the Aussie. And we have a monthly sell. All right? That bar right there, monthly sell bar. Danger, warning, hello. Bad look to it. Terrible monthly sell bar. Something's going on. So we look over here at the weekly, and we can see the weekly chart. Let me get this to a good level. All right. Actually, I got to get this better. So I know when it shows up on YouTube, it doesn't always work out that great. There we go. All right, so we have several really, really key points. On a weekly chart, you can see 97. Wow, big calling right there. Very big calling at 97. You can see 96 and 94. These are all very, very critical numbers. I'm not saying we're going there. I'm just saying the market over time, weeks and months, could easily try and work its way down to some of these really, really critical levels. On the daily, well, we should look at that. Right now we're at 102, so we'll look at this right here. There's a weekly importance point right now, 101. 40s, 101 60s. This is very important here, and we're tapping it. All right, so I think it's very clear if we look at the 5-minute, 15-minute, 1 hour, 4 hour daily chart. It's very, very clear we've entered a significant downtrend on the Australia dollar. So our daily chart is really, really dropping. And we had some bidders that were bidding the other day, right around the 101.85 level. And these panda, I'm sorry, Asian Chinese bidders held us up at 101.85 and rocked it almost back to 103. It was incredible. But here we are returning to our buy point. Okay, so this isn't very healthy, and it's kind of a scary look. My point being is that over the course of many weeks or months, we potentially could break this 101.50 area. And if we do, we start to open up the doorway for parity, and every single 100 pips below could slowly grind over time in that direction. And I'm actually anticipating this. I am anticipating a general downtrend over quite a while to carry us lower. The trend is underway. It's starting. And a trend set in motion, it's pretty hard to stop that trend. All right, what the heck? You know what? I'm going to give you even more. I mean, I was going to stop at New Zealand, but let's really go for it. I've got time. It depends how fast I cruise, and we can do even more. I'll show you a few more after this one. Some really great things. Really great. Okay, so New Zealand, very similar. We're into lofty territory, and the New Zealanders are complaining, about how high their prices are, and threatening intervention, threatening cutting rates, and all kinds of stuff is occurring right now. So if we look at this one on a weekly chart, this is New Zealand dollar. We have typically what is known as a very bearish pattern. Right here is a bearish tightening weekly wedge. It's not bullish at all. It's very bearish. And you've got multiple drives up, okay, 3 drives up into this higher price point right up here. And ever since hitting those 86 levels, we've completely fallen apart. Now look at the weekly triple wicks located right here, where the trend line is roughly located. Oh, I'm sorry, quadruple wicks. My bad. Wow. Better get my eyes checked. Okay, so not triple wicks, but quadruple wicks. They're all gone. Busted, busted badly. You lose. You die. You're dying. Oh, yeah. No joke. I'm trying to add a little flesh to it here, guys. But seriously, this area is under serious pressure. Look at that big monthly sell bar. I'm sorry, weekly sell bar. And the trend line break. So, I mean, what do you have? You got wicks breaking down, trend line breaking down, big whomping weekly sell bar. You know, this is really bad. This is not a good look. Very similarly, the daily chart of New Zealand dollar, otherwise known as the Kiwi, is also breaking. We can see that we have a trend line break. Bingo, right there, trend line break. Bad look to it. Very, very bad. So even though there may be a lot of buyers, you know, continually waiting in the wings to buy the dips on these, you know, eventually they may be crying because we see a limited dead cat bounce. Actually, let me get this off of the view here. You see a very limited dead cat bounce. It pulled up into the daily wick location, right? On the dead cat bounce, see the small daily buy bar? And what did it do? Pulled right up there, which was supportive, now resistive, and it said, no way, you're going right back down. So the market has crushed it again, and we have Kiwi falling. So I'm still looking at this going down. All right, I'm looking at over longer term, AUD and Kiwi going to get crushed. But now here's the juicy part. I expect that AUD is going to suffer much, much worse. And this trade, we've made a fortune on, by the way. Absolute fortune. I can't even tell you how much. It's almost sick. It doesn't even... Yeah, we'll skip that. Okay, AUD New Zealand, phenomenal down trade. We called this thing short back over here. And we pretty much have been riding it multiple times. Every time it pops, we short it. Every time it falls, we book it. Every time it pops, we short it again. But right now, we're having a little bit of a problem. The AUD New Zealand is getting too much of a rise. It's starting to irritate me because it's been multiple days. And, you know, we are still there, okay? When I say we, I mean me and, you know, 50, oh no, it's actually almost 60 other traders are actually here to short this. Every little pop, we're on it, man. We are taking it short and we're covering. Taking it short and covering down here. This trade is a beauty, all right? We're lifting off and we're up against some, you know, Fibonacci retracement areas right now. And we can see the confluence. I don't know if we're going to pop this or not. We might. And if we do, here's another potential area. You know, this video actually goes out to a lot of people. This goes out to our roomies, and it goes out to others that are not our roomies. But you only get to see this part. You don't get the, you know, the intraday stuff. If you want, shameless plug. If you want the intraday stuff, join up with us because we did phenomenal. This week we made 3,300. No, I'm sorry, 3,600 and something pips. It's incredible. Best week ever. All right, so we're looking at potentially getting over here. If it does, who's going to short this? Me. Pick me. I will. You better believe it. If we make it up here to this 618 fib at 124.50s or 124.60s, do you think I might be shorting that area? You better believe it. I'm on top of that. I'm all over that. So I hope it does, but I don't have any guarantee. Anyway, long-term target way down here. It's a huge swing trade that might last for half a year. We're looking at 118.50. How long is it going to take us to get to 118.50? We don't know. You know, it could really be a lot of time. We might be talking 6 months. I just cannot tell right now, but that's our target. So I like that one. So I'm really liking everything short, pretty much. I like the euro short and the pound short and the dollar long. I like the U.S. dollar long and the Swissy short. Looking at U.S. Swissy rising. I like the U.S. dollar long and CAD short. CAD going way up again. I'm liking odd New Zealand short, and I like everything short. I'm just call me Mr. Short right now. Brings us to gold. This is a scary chart. Just kind of sit down, okay? Sit down, take a deep breath, hold your seat, whatever you got to do. This is really frightening. You're not going to like it. Gold, oh mama, oh boy. Well, the old hyperinflation scare, of course, and the unbelievable downtrend for US dollar has resulted in gold going absolutely ballistic. Since this time over here in the 1999s and 2000 and 2001, when you could practically buy gold for the price, the cost of pulling it out of the ground, $265 to $300 an ounce, this has been the greatest trade of the last 12 years. I mean, it's remarkable. Somebody give me a time machine. I'll sell my wife and children and buy gold over here. I mean, this is just, that's a joke, by the way. I wouldn't really, I'll think about it, but I wouldn't really do that. Gold has been on a tear. I mean, we have an 800% rise. It is remarkable. But there's a bad problem going on right now. 2009, right up here. Look at that trend line. Ouch. Destruction, murder, mayhem. This is awful. You got a terrible trend line breakdown with monster monthly sell action. Everything is red. Hi, I'm a monthly sell bar. Hello, I'm a monthly sell continuation. Hi, I'm a monthly pause bar. I'm another monthly sell bar. Ouch. Okay, please, be with me on this one. This is really scary. And I love gold. I love gold. I love silver. I like to buy them. But right now, I'm fearful. And I can see this 15.25 scaring the tar out of me. 15 and a quarter is a double bottom low on a monthly chart. If we break 15 and a quarter, there really isn't much to say that we're not going to attack 1500. If we break 1500, where are we going? 14? Are we going to stop there? I don't know. I mean, I look at gold and I say, wow, where could we go? 12? God have mercy, I hope not. This is just a frightening monthly scenario. Longer term potential of bearishness, and it makes me rather nervous. On the weekly chart, you see the very, very same look for gold. There's your 2009 low. There's your trend line, your weekly sell action. You can obviously see the 1800s is just being way too resistive right now. 1900 is remarkable resistance. And we have that very same 15 and a quarter. Point. 15 and a quarter is like, for me, and I'm sure for many market participants, this is going to be the line in the sand. Tragic location. So let us pray right now that gold holds this 15 and a quarter, because if we don't, I can't see much to stop us from going to 15 or almost 14 rather quickly. Shouldn't take too many weeks. Very scary. All right. I don't mean to frighten you out of your seat, but this is not happy time. All right. So gold, tragic, and the daily chart is looking really awful. And the daily channel has been broken. So it's now giving us instead the acceleration of an expanding megaphone. And we actually have talked about this in the room before, about the acceleration principle and what happens with the trend lines when you eventually, you get dropping trend lines. They start dropping, and you go into new, very aggressive moves. So that's kind of what we're looking for right now with gold is aggressive down and rather scary. But I like gold, and I still think it's a buy at certain points, but you better... I have to say, I don't think I'd want to be a scalper on gold. I don't want to just do 5-minute charts or anything like that. I would be looking, far more importance on the 15-minute charts. We got 15-minute, 1-hour charts. You want to focus your scalps on this for higher ground on higher time frames. Alrighty, and let me think if there's anything else I'm missing. Gold, silver. Just trying to see if there might be one more chart. I'm trying to look at my time, see how much time I have left. Well, I really don't have a lot of time left. Okay, we could look at the SPY really quick. We'll take a look at the SPY. All right, on the daily chart, the SPY has had a beautiful channel break, and we had a beautiful daily sell bar that rocked us low. We actually called this short a bunch of times in the room, and we're looking at some significant bounce backs. As a matter of fact, I think I called it short right here when we were at the 786 fib. I think I mentioned this as a short, and we came up and hit the 886 fib and then fell to pieces. So a beautiful run from 15.25 all the way down to 15.02. So this is potentially very bearish, but on the longer term charts, which it's funny, a fellow roomie of ours just sent out a picture of the Dow. I don't have it right now, but I just glanced at it and it was kind of funny. I didn't really look at the longer term picture just yet, but supposedly calling for the Dow to go to crazy heights in 50 years. I don't know, whatever. Some Elliott wave type of forecast saying that 50 years from now the Dow should be significantly higher. And that may occur, who knows? But the way they debase our money, they just keep debasing our money. We should really be seeing gold at 5,000 an ounce. We should see the Dow at 30,000 because you're just taking our money and you're going crazy with it. You're printing 4 times, 5 times the amount of money. You'd expect that everything would adjust in prices, but they're not right now. All right. So anyway, I kind of got off track there. Sorry about that. Getting right back on track. The US dollar index, one more time, just want to show you on the monthly chart so we can end our discussion this way. If we look at the monthly and we look at the long-term picture, it's been an incredible downtrend. Always, always down, right? But we do have these occasional, breaks, these trend line breaks and stuff. And you just redraw trend lines all over the place, and you'll see that you're constantly having to redraw them. So I can't go from that peak over there. I just can't do that. I now have to look at the recent peaks from 2005 to where we are now. And what I see is something potentially setting up here. It's kind of scary. Do you see it too? What do you see? I see we could be having this discussion about a year or two from now. The trend line that was made in 2005, the trend line that was drawn from 2009, the trend line that we continued to draw, right? 2010 was under attack here in the middle of 2013. Broke out. This is what I'm looking at. You guys see it? All these lows holding. We have a monthly triangle. We have weekly breakout, daily breakout, everything, all the charts together saying the same thing. New trend, new trend. Monthly, weekly, daily, do your work, do your chart work, look at it. Monthly buy, another monthly pause. What is this next month going to bring? Uh-oh. Is it possible that in the month of March we're going to go much higher? Trip through 84? Keep on moving? Potentially break the trend line? Potentially bust out of the north of this upper channel and go straight to the monthly moving average, the 200 MA? Is this possible in the next few months that we could go here? I do believe it's possible. I definitely believe it. I'm looking right at it. I've done my work. I've looked at my charts. This is a possibility that is really setting up for the next 1 year or so. We could be looking at a very significant move. All right, well, anyway, that's it for today. I'm out of time. I just hit 50 minutes. And I wish everybody a great weekend, guys. Have a great weekend. Look your charts over real well. And I just want to say thanks for watching. And if you're not a member, if you've never tried us out, we just want to give the shameless plug here and say we're fairly good, okay? We're not, trading gods, but we're fairly good, and we do make a lot of pips. We'd love to have you on board. If you want to consider it, check us out on the web at forextraderoom.net. Okay, thanks for watching, everybody. Have a beautiful weekend. And to all my roomies, see you guys on Monday.